The accredited investor rule, in my mind, needs to be kind of like re-architected altogether. It's hugely problematic and it's counterproductive to what it's trying to accomplish.
Hello and welcome to the BetaKit podcast. And for the last podcast of 2022, we're going to give you what you want. We know that our AMA podcasts have become some of our most popular to the point that we're now doing them monthly. So for the last podcast of the year, we're going to take it up a notch and bring on a special guest, Anthony Mouchantaf, Tony Dagger himself, RBCx's newly head of capital. So the format for this AMA is the same as always. We ask you for questions about Canadian tech or tech from a Canadian perspective. And then Rob and I try to tiptoe around them while not getting too drunk. Let's dig in. Okay, Tony. People were hyped for your return. They maybe submitted a few questions directly for you, which is the first time I've ever had a guest get questions by name. But I don't think we're going to start with those. I think we're going to ease into it a little bit. I'm going to throw to an old friend of the pod, narrative bookends here, one Patrick O'Rourke, Mobile Syrup's managing editor, used to be a regular on BetaKit's CanCon podcast, the predecessor to the BetaKit podcast. And he asked a very simple question: will ChatGPT replace me? Now, smarter people than Patrick asked similar questions, which will, I think, extend the context of why ChatGPT would replace someone like Patrick O'Rourke. This one's from James McLeod, comms person at CCI, Council of Canadian Innovators, and a former journalist himself. He said, as a writer and as someone who employs writers, how are you thinking about ChatGPT and similar technologies? Is it something BetaKit would look to incorporate as a business? And if not, do you worry that your business might not be threatened by another company that deploys this tech for commodity writing? Parentheses, I'm not saying BetaKit can be replaced by a chatbot, but low-cost content mills are a real economic factor in the online news business, which I think pointedly is why Patrick O'Rourke is so concerned. No. So
doesn't this go to you? Isn't this a Douglas
this one's to me. We're going to ease it in, but we only have the editorial perspective here. Tony's going to be supplying the technological perspective as well as what he'd find investable. I would say first, take a listen to our year in review podcast where Rob and I both predicted, I think, that generative AI was going to be the big trend of next year. So this is on top of mind for a lot of people, not just Patrick O'Rourke wondering if he's still going to have a job. I would say when it comes to employing these technologies, that's an interesting look. But I think we have to draw a distinction between the value of quickly generating coherent and readable copy, and then whether or not that copy and the ideas contained within, or particularly for journalists themselves, the facts contained are accurate. So I could see a circumstance where possibly, particularly for singular sources of data, maybe we were utilizing ChatGPT quickly to summarize Crunchbase funding data, or even historical BetaKit articles for new writers to get a summary of okay, here's everything we've written about Wealthsimple over the past 4 years. What's the consideration? But as a replacement for reporting, well, forgetting the legal considerations, of which there are many, I don't think that this technology has demonstrated that it can do any sort of reporting, any fact verification, or truly set things in context. So if it were looking to summarize maybe financial reports, okay, that's great. You just feed that thing in and it pops out the 3 paragraphs that every journalist hates to write during the financial reporting week. But if you need to connect that to anything else going on in the world, at that point you need to be verifying that. You need to be doing your diligence. You need a reporter anyways. So I'm not sure the speed to generate that copy at this point is anything valuable at this point. But I would want to open this up to the two of you because, Rob, one, because you, like me, are freaked out by this. And then I guess two, Anthony, you're the type of person that would like to invest in businesses that would probably want to disrupt me and replace me with robots, just like Patrick. So dealer's choice here. I guess, Anthony, you are our guest. We'll let you get on first, and then we'll go back to Rob, and we'll bookend that with the predictions. But how are you seeing this technology and its potential use cases at this point?
So it's a good question. So for anyone who hasn't used ChatGPT, it is clearly a leap in technology, right? Like it is.
Technology or a user experience?
No, I think it's technology. I think it's technology. I think there's more. I think there's more to come. There's a lot of interesting things in the pipeline. Like it makes mistakes. It's not, in air quotes, explainable. There's no citations. Like I think there's more to come, but the user experience is phenomenal, and it's been monopolizing kind of my time on the internet, right? Because its ability to engage with you at a very granular and specific level is amazing, right? And it's honestly, in many ways, a lot better than search engines and a lot better than Google, because you kind of control with amazing specificity the things that you discuss with ChatGPT. Like it's really, really phenomenal and really mind-bending in a lot of ways. Now, the caveat there is that ChatGPT, specifically in the context of journalism, is not producing original content, right? Like what ChatGPT is doing functionally is scraping the internet, like looking at what's public source, synthesizing it, and then repeating it to the user, right? So I think journalism is one of the fields that would be the least disrupted by ChatGPT, right? Because it's not doing the heavy listing of. Well, it's definitionally so, right? Like my sense is that it's not producing that original content. It's looking at what's already produced. I think it will synthesize journalistic content. Can it editorialize? Probably.
Well, I think we've seen that it can, but it could also editorialize based upon whatever you prompt that you give it. So if you give it a horrible prompt, it will produce that for you using natural language that sounds accurate if you were to not know anything about the subject. I'm heartened to hear that you think this, Anthony, because I do feel like this could be, for every publication that just writes up the press release, if you're just looking for a condensed 3 paragraphs of the thing that was submitted, ChatGPT could do that faster than a human being, because even human reporters do that without thinking, right? You're just condensing the information into readable context. But I agree, once you get beyond that point and you need to verify that information set in context, it seems beyond the scope of this product. I will say though, something you just said, you've been playing around with this, which is, I think, a really strong signal of a MVP, minimum viable product, on the way towards product market fit. If you're spending a lot of your internet fuck around time with something, there's probably something there. And most of the really cool or no longer cool social media tools that we use nowadays started as a really fun thing to kind of mess around with. I was just thinking, we're spending some time in the new year revamping the user experience on BetaKit to find information. Because if you're reading BetaKit every day and you're listening to this podcast, I think you have a really good map of what's going on in Canadian tech. If you're coming in once a week, once a month, or into a story, it's really hard to find all the information that we're providing to you. And I know for a fact that the search on BetaKit sucks. It sucks hard, particularly because while we write in detail on a number of companies regularly, we don't write very broadly. So if you're looking for what is BetaKit written about Wealthsimple? What is BetaKit written about Shopify? What is BetaKit written about venture funding rounds? So many results come up so as to not really be helpful in terms of aiding with discovery. Meanwhile, ChatGPT being like, show me what BetaKit last reported for Q3 2022 in terms of venture funding, it could summarize that with the relevant links. I think that's really cool. But that, again, that's a search and discovery summary feature, not replacing the reporting. So actually, I'm kind of getting hyped by that. I would love to embed a ChatGPT BetaKit containerized search function into the site. Rob, when you were going to point towards this as your future, like 2023, we're going to be talking about this more. It's an underserved story. What was your motivation for that?
AI in general, ChatGPT is just a manifestation of, holy crap, we've hit some sort of inflection point in, I'm kind of just going to extend what Tony says because I kind of totally agree. I think that last mile is where it fails. I mean, it's worth noting that it looks like artificial general intelligence, but these are like probability of the next word is this kind of, it's not actually intelligent. It's not regurgitating actual stuff. And I think 2 things. One is that I think I read an article in the Times where scientists asked it some very specific questions and it came back with very authoritative and cited answers. But when the scientists went back and checked those sources, they were wrong, opposite, or didn't have anything in it.
Yes.
So I think the threat to journalism is less about will it replace the journalist in terms of it can do the fact checking and trust building I think what it'll be is like there's going to be a lot of shit on the internet that looks like it's something, and proving that you're a real journalist and have done your actual work, I can point to this literal fake news and say, look, that's a story, but this NBCN reported it.
All you got to
Like,
do
that's
is
not
look
a
at
thing.
Mark Andreessen's Twitter account to see how this can be used in bad faith, right? Which is interesting, right? Because truly right now, this is a bullshit generator, right? This rounds out copy in a way that every writer who is on deadline, who is looking to fill 3 more paragraphs, who concludes a story, shout out Daryl Etherington, now managing editor of TechCrunch, time will tell if blah, 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 because they can't think of a conclusion or they don't have enough time to write it. That's what this stuff kind of is. And the authority with which it is wrong is concerning and alarming, but hopefully a differentiator against journalistic reporting. I guess, Anthony, to get the full VC perspective in here, when you're looking at this, are you saying this is really, really cool? We can't wait to invest in version 3 of this, whoever figures out reference sourcing or some other component of this. We know that OpenAI, we just shared last week in our AI newsletter, they're predicting $2 billion in revenue by like the end of next year, like some crazy stuff. It looks like they're getting some of their early customers, potentially offering them a slice of the pie at the company, getting an equity stake in it, which is a really interesting way to generate long-term revenue and interest and scale. When you're looking at this product, are you like, everything's changed because of this? Or are you like, I am now paying attention to this sector way more because I want to get not the MySpace equivalent, I want to get the Facebook equivalent of this new technology?
The honest answer is that we're all still a little shell-shocked in some ways. I think everyone's still kind of digesting this thing because it came somewhat out of left field, right? Like, so for me, at least, I didn't have an OpenAI account before ChatGPT came online.
Same. I had to pretend to not be a journalist so I could get in. Thanks, OpenAI.
Yeah. And started engaging with this thing and had this kind of, holy smokes moment where we are at a different place technologically today than we were, as far as I'm concerned, a week ago, right? And so I think digesting that and kind of figuring out the ramifications, I think, is a kind of tall order. What I will say, though, what's really, really important is that it's like ChatGPT and AI generally, these are still derivative technologies in the sense that their quality depends on the underlying, and the underlying still being human output for all intents and purposes, right? And so understanding exactly like what is the bias and what is the erroneous information built into the kind of core of human knowledge that this AI is kind of regurgitating is really important, because it's kind of reinforcing that. And this is kind of Rob's point. Like, I was engaging with ChatGPT on subject matter that I knew nothing about, and I found it to be very illuminating. And I was going down rabbit holes and really engaging with it, and it was really, really good. I engaged with it on subject matter that I knew a lot about. And when I engaged with it on that subject matter, I found a lot of mistakes. And that made me nervous.
It's also worth noting that like it is not the core of human knowledge. It is everything that is on the internet. And everything that is on the internet is, for example, overrepresented with answers to Stack Overflow questions. So it like leans heavy to tech stuff, and you can get it to do tech stuff very well. But it doesn't do a lot of other stuff very well because it's whatever the hell it ate on the internet. And to your point, there's not only bias, but there's like the data in, garbage out, I suppose. It's
it is telling that there's been reports that Quora is exploring some sort of ChatGPT integration, which is, if you look at places on the internet where everyone just loads up and provides air quotes answers to questions, it kind of speaks to that. Is there anything telling here where it seems like the one section where there seems to be a high level of accuracy with the information seems to be programming and coding? Is there anything to that, either in terms of that's the biggest data set in the world to leverage, so it's just more accurate, or it's easier for it to do that? Like, are we going to go from learn to code to learn to write because coding was replaced by chatbots? I should also note that it seems like ChatGPT right now can very effectively generate contracts, mostly because if you want to be consistent there, you just copy the standard language.
Yeah, lawyers should be more scared. When you have a deterministic question with a deterministic answer, it's a fact-based binary true-false thing. Aside from the data set being bigger, and aside from, yes, all developers these days just copy and paste from Google and or use like Copilot or whatever that thing is on
Git
GitHub.
Repo. It's not copy and paste if it's...
Right. So I'm like, those are deterministic fact-based answers with large data sets. I think that's easier. And I think what we've seen across all industries before AI came along, software, law, all these industries are being commoditized from the bottom up. They're being eaten from the bottom up. No code is an example of software before AI. So it seems like a next natural step to these things, but there is a ceiling where human judgment comes in and opinion, and that's the whatever magic. If AI can get to that point, that becomes probably generalized intelligence. And I don't know if it can actually get there, but it can be certainly scary on the way.
You made a point on generating legal contracts. So what's interesting here is that ChatGPT generates templates, basically, right? And law firms have templates galore, right? So like when you go to a law firm or you go to a lawyer and you go, hey, like I have this, contract, I'm buying a house, I'm doing whatever. They're not freestyling, fresh, like rewriting. They have templates that they go to. The reason that you pay a lawyer, right, is that they are attuned to the, like real curiosities of your particular case. It's like they'll take the template, but then they'll cater it to the very specific nature of kind of what you're dealing with. The point of generating a template, you go like, yeah, like whatever, right? Like you're not gonna ask ChatGPT, to generate a contract on a, property purchase and then execute it with, full confidence, right? You're still gonna need a look. So I think there's that piece where like you see kind of the birth pangs of this thing being, yeah, like potentially AGI and being able to replace some functions, but we're not quite there yet, but it seems to be going in that direction, assuming we're on the right trajectory, which is, I think, a whole other conversation. I think the other thing is, I'm going to, like, believe it or not, talk about religion here momentarily. Believe it or not. So I saw this thing on the internet that was going around, and I saw it a few times before I actually did my due diligence on it. And this was coming from like very believable characters, like very believable kind of, non-believing kind of individuals kind of pontificating on this. And basically what it was this commentary around how Jesus Christ, who regardless of your kind of religious affiliation, but just this notion that Jesus was modeled on the figure of Dionysus, who was a figure of Greek mythology. And basically what it said, I saw it multiple times, like, oh, well, did you know Dionysus was also born of a virgin? Did you know he was born on December 25th? Did you know that, he turned water into wine? And all these things. And it was said by, again, very believable people. And I kind of took it for granted. And then, but when you do the work, you find out actually somewhere someone made it up and it's just not true. It's just not true. But it made its way into the kind of fabric of the internet. So I don't know exactly whether it's algorithmic or how it's kind of how ChatGPT or kind of these algorithms or these kind of AIs are privileging some information over the other, but you run the risk of regurgitating things that are false.
So you're saying that actually the internet was the worst data set that OpenAI could have ever used? All right, let's move on to our next question. This is also coming from James McLeod. He's getting a little overplayed here. He shows up to our live stream AMAs late in the evening, so you got to give him some credit. And this is a bit of a flex for him, but he actually responded, shouldn't you be asking this request for AMA questions on Mastodon or Post News now? Or maybe LinkedIn? Spoilers, we did, James. But more seriously, do you think Twitter survives as a place for the tech sector to talk shop in 2023? And if not, does something replace it? Or do we change our patterns on how we act online in 2023? Well, to that last part, not likely. Let's just kick that out of the way. Can't really blame James too much here asking questions that we spoke to on our end of the year wrap-up pod. I'll just note that my 2023 prediction was that 2023 is finally the year that I quit Twitter because it's generally become untenable. I will note a variety of other tech journalists from Casey Newton to Neil Patel and others have already basically left the platform, despite being the people like platform has broken more Twitter stories than anyone recently. And Neil wrote the text of the current Elon Musk experience entitled Welcome to Hell, Elon, which I actually think is, again, Nilay is speaking of lawyers, a former lawyer, knows a lot and has been thinking a lot about content moderation on the internet for the last 20 years. Just a master thesis in all the issues and difficulties of running a modern social network. And instead of resting on his laurels, absolutely dipped out of the platform. So when I was tweeting at him during the most recent Elon traumatic episode, I was like, come on, man, at least hit me with a like. I'm hitting you with so many fire tweets, and then realized that days later he had just left the platform. Like, I don't think this is a place where at least tech journalists will continue for reasons of principle or safety or otherwise. But I don't know. How do you guys feel? This was my prediction. I'm the big Twitter head here. You are tech sector people looking to talk shop generally, and you are at least presenting enough to pass amongst the pro Elon, pro Andreessen Horowitz tweet Illuminati. How are you feeling about where that platform goes in 2023?
Rob, you go first, man.
You can't 1, 2, 3 not it. Come on,
Well,
Rob.
I mean, I'm also have to stay consistent with the episode that has aired before this one, which I don't remember what I said. I do know that like LinkedIn has become Facebook, which is really irritating.
I'll say the best questions we got for this episode.
No, I know.
LinkedIn,
That's cool.
sadly.
But it's like a cross-pollination of Facebook, LinkedIn, old-fashioned LinkedIn, the new-fashioned LinkedIn humble brag, and then like constant Facebook posts about what you're doing with your life, which I don't really care about. In fact, there's a subreddit called LinkedIn Lunatics if you really want to dig into LinkedIn.
We got great engagement on our Spotify Wrapped when we published it on LinkedIn, just by the way.
There you go. No, I mean, it is the most logical place to go. That's where I spend most of my time posting, reading, honestly. I mean, that and Reddit. But look, it's going through a turbulent time. What social network are you like, now this one is the right one. It's got its shit together. I feel comfortable on it. I feel comfortable consuming its content. It's all poison pills. And so, Twitter will iron its crap out. Maybe Elon will sell it in a fit of rage. I think the people who are on Twitter I know he said it's the town square. It is the elite town square. It's where the thinking people, like where the nerds go, which is why it's punches outside its audience size. And so I think that like elites leaving it, people, intellectuals, public figures leaving it, is as much a protest as anything else. Does it survive? Does anyone really who cares? To be honest with you, Mastodon is hard to use. Post.news, you got to wait for your invite. LinkedIn is just a different venue. That form of dialogue goes away. Maybe someone will try to replace it. I think we're now realizing what social networks are doing to the bad part of our society. And I think that if Twitter didn't kill itself and self-implode, it's not clear to me that it would not be a changed animal in the next 5 years anyway.
Well, Anthony, you are Canada's largest bank's venture division's head of capital, which is to say a VC. Therefore, have you already chosen a side in the culture war here? Are you obligated to ride or die for Elon he's just got a different way of doing it, laying off 80% of the government? Like, are you, where do you fall on this? Do you maybe, unlike tech journalists, maybe have to have a more difficult time navigating that conversation because battle lines are being drawn within your sector of the industry most directly? Are you an all-in bestie? How do you even navigate that when you see some of your industry's not only peers but luminaries advocating for absolute jackassery right now because they probably bought into the Elon liquidity is everything, can do no wrong hype train for a platform that he's completely devalued over the last 4 months?
Look, I have no public views as it relates to the kind of fault lines on this. So what I think is really interesting, is I think Twitter is going to be an HBR case study one way or the other. I just don't know if it's going to be a success story or if it's going to be a cautionary tale. And I honestly think it could go either way. I really don't know. What's crazy though is he took this thing, he bought it, and he cut half the people. That's significant. And if the platform continues to run unabated, then I think it introduces really interesting questions about, honestly, the labor force and how you run these businesses.
Let's dig into that for a moment, because I've heard
Yes.
that quite a bit. And ignoring the fact that for a minute, people who no longer work there built the platform that is able to sustain. That's a note. And as well as noting, I think we've all seen Twitter doing some wonky things lately, whether it's clicking into tweets that say they've been deleted and you click in again and they're there, or some
I just
other
get
things.
notifications Elon Musk is doing something and I don't think I follow him.
Yes.
So.
Or people I suddenly started following that I've never seen before in my life, or unfollowed, which is a common situation. Let's just talk about the platform working, because there's always this focus on the tech. If you can log in, if you can open the app, it's still working, it's fine. Meanwhile, we've seen tons of issues with content moderation, personal attacks, people getting banned. And it's like, is the true test of the platform whether or not the fail whale shows up again? Or is the true test of the platform making a place that people want to engage and converse and managing those behaviors at scale. Again, I recommend everyone check out the interview that Nilay did with the CEO of Automatic, which owns WordPress and Tumblr now, which is a crazy story. Very thoughtful conversation about what behaviors and experiences fundamentally break at the scale of technology, like just don't work. Bullying being one. There's no case in which bullying at scale, at tech scale, gets better. And then there are other behaviors that can be better or worse depending upon how they're curated or moderated. I would say that that component is completely gone. And for anyone other than a certain class of people who are just saying pay $8 a month, or the FBI has been telling Twitter to delete tweets or whatever, that experience has been completely ruined. So I hear what you're saying, Anthony, and I agree that there are a lot of people, you see the Jason Calacanis, people are sharing brave anonymous CEO posts about how rigor is back in venture and maybe we don't need to hire people and we never really wanted to give people ice cream on Wednesdays anyways. All of that stuff is back. But I just know that no one seems to be enjoying the experience of being on the platform, which is what a lot of those people did in their job every day. So I don't know what needs to break first, but I feel like some things are already broken. Hey founders, are you considering building your startup on AWS? From Ada Support to Neo Financial, Canada's top startups build on AWS, but they don't do it alone. So whether you're looking for help solving a technical challenge, hiring the right engineers, or finalizing a fundraising round, AWS has all the resources you need to get started. There's a reason more startups build on AWS than any other provider. AWS is here to help you succeed from inception to IPO. To learn more or to start your cloud journey, go to www.aws.amazon.com/startups. Okay, we're back. And enough of those easy warm-up questions about the future of generative AI or Twitter. Now we're going to go to the real tough stuff. And while I would say the questions we got submitted, unlike previous episodes, were a little bit more subdued, a little less direct attacking, a little less PhD thesis, still our audience nonetheless brought the goods when it came to that's a good question type question. There's a couple here specifically that I feel like only Tony can answer. So let's start with these now that we've got them warmed up. And we'll start with this one. This one's coming from Dan Flatt from Neighborino. He asked, the OSC's recent self-certified investor prospectus exemption pilot will allow an expanded class of Ontario investors to self-certify that they understand the risks of investing in private companies and invest up to $30,000 per year. Alberta and Saskatchewan have put similar pilots in place. This means that many more private investors can act as micro angels at the critical early stages that were previously only open to friends and family and accredited investors / dentists. Do you see these pilots changing the early stage startup funding landscape? And then as a follow-up question, Dan asked, why are people not talking about this? Are not enough people reading the OSC's blog? I think this is the extent of his question. So Tony, this is a direct entry into your sphere. Now, I think we've seen other similar things related to this in terms of trying to open up venture investing to more people, democratizing. We've had very long, arduous Wall Street bets, stonks conversations, but I know Wealthsimple has just closed funding on their new anyone can be a VC fund. They'll be the super angel to, I still think you need to be an accredited investor at that stage. How do you feel about our provincial regulator? Because we don't have a federal one. And several other provincial regulators across the country working to open up a stage and class of investment heretofore restricted only to people of measurable wealth.
So luckily, I do have public views on this point.
Let's go.
Look, so first of all, I think it's a good thing. It's 100% a good thing. I think it's bad that we have a provincial regulator and not a federal regulator. I'll take it one step further, and I think it makes sense to have a continental regulator to some extent. Like, I think Canadians generally need to get comfortable with the notion of
like a CONCACAF for regulation.
A CONCACAF for well, I think just us in the U.S. to start. Like, I think we need to get more comfortable with greater integration. Well, oh come on, that's not what I'm getting at. I love Mexico, but genuinely, like I do think that the that border on the 48th, is it the 48th parallel? It's kind of a historical relic, if I'm being honest, right? Like, I think we need to get comfortable with the notion of free flow of capital. I think if the Europeans can do it with, disparate cultures, disparate languages, I just think it's one thing that we need to talk about, right? We need to figure out the free flow of capital on the continent. But that aside, the accredited investor rule, in my mind, needs to be kind of like re-architected altogether. It's hugely problematic and it's counterproductive to what it's trying to accomplish, right? Like, the basic premise of the accredited investor rule is that you are protecting unsophisticated investors from essentially predatory assets, right? Or from predatory sellers of subprime assets, okay? But the challenge there is that A, it's paternalistic, frankly. B is you create like a whole bunch of unintended consequences in the system, right? One, it's paternalistic from the standpoint of if you make less money, definitionally, you are less likely to be an accredited investor, which again, like, does financial sophistication correlate with earning potential? Like, probably, but is it a one-to-one? Also probably not, right? So that first thing I think is problematic. I think the other issue there is that if you only make unlisted securities available to high net worth individuals, then you're creating a weird event horizon at the time that these securities go public, right? Because prior to IPO, only a subset of investors have access to it. Post IPO, you have the kind of floodgates open to non-accredited investors who are more likely to be left holding the bag on bad investments.
And never,
right?
and never get the best terms on good investments. We've had refer to people to our IPO podcasts.
They're bailing out high net worth individuals. So it's problematic in a whole plethora of ways.
Given what's just happened with FTX and lots of people got their money wiped out because it was a Wild West, does that not strengthen the argument to keep being paternalistic and protective? I understand your argument.
Well, let's extend it beyond FTX. Let's just talk about NFTs. Let's talk about stonks and Wall Street bets. So to that point, Rob, I think there is a balance here between protection and what that means, but then the idea that if you containerize a section of society away from financial opportunity for their own good, they just find other shittier, unregulated things to invest in, right? And I think FTX has proven that this couldn't happen in Canada, but it happened by Canadians. I'll refer back to a bunch of, just again, search teachers on BetaKit and you'll find some stuff. But how do we strike a good balance so that the average retail investor has access and opportunity, that it's not just the wealthiest person in the family that can support the friends and family, but there can be a little bit of a grassroots campaign here, but then protect against large issues? I guess just because it is regulated and you're being entered into this, and maybe it's a little bit more of an educational component, or is this not a cap on where you need to be accredited investor, but like a function of your net worth here? Because I think that's the worry, that if people below this certain threshold, if they make a bad investment, that is game over for them. Whereas if you're above that accredited threshold, it might sting a little, but you're not losing your dentist business or your 10 McDonald's or things like that. Anthony, would you want with this some sort of national education program to ensure that emerging entrants are onboarded into this and understanding? Because there's a lot of ex-Shopify employees right now who called themselves VCs for the last 2 years who suddenly realize it's a little bit harder when interest rates go up. And those are people that work in the space. Now we're talking about an alternative to putting your money in Canadian bonds or golds, or like average actual living and breathing salt of the earth Canadians here. So what activities or tools would you want to see alongside this to ensure that we're getting a raised ceiling, but a very high basement in terms of potential outcomes?
So let's start with the extreme example of FTX, right? Like, let's start with one example where the investors kind of lost their pants. So I think in the interest of being intellectually consistent here, my sense is that private investors who are not high net worth, however you define it, who are non-accredited, should have the freedom and the ability to invest in FTX if they understand the risks involved and if they have access to the proper due diligence, right? So FTX must make it clear that they don't have a proper board of directors, they don't have proper governance, they don't have, a whole plethora of issues kind of related. Like, I think if private investors who show themselves to be financially literate, and you can meet that financial literacy requirement in a whole host of ways, whether that's, some kind of certification, whether it's, course you take, general education in university or college or in high school, whatever the case may be. If you can prosecute your financial literacy threshold, I think you should have that freedom to make that decision. There are other things that the regulator can do to facilitate the movement of capital and to improve the, call it like, efficacy of private markets. One example would be, maybe you don't relax the accredited investor rule on individual securities, right? So maybe what you say is that individual investors who are non-accredited cannot invest in companies, right? They cannot invest in FTX, for instance. But what they can do is they can invest in fund of funds, or they can invest in funds who are themselves investing in a basket of assets. Today, they cannot do that.
Wait, so people invest their pension back into the pension fund to invest for them? That's a weird circular loop.
Well, no, but people can invest in a venture capital fund or a venture capital fund of funds, right? So people can get exposure to FTX through their portfolio, provided that they have sufficient diversification across that portfolio. So they're getting access to an asset class without having overly concentrated positions. So that's one way of doing it.
You're kind of arguing a little bit for like the Wealthsimples model. Criticisms that we've heard of that model, and we haven't really written anything on BetaKit, but stay tuned, 2023 is a new year. Like, venture is a very specific asset portfolio with very specific math for VCs to make the outcomes that they need. If you have just retail investors contributing fund of funds at small scale, if they're not at an accredited level, can the math functionally work out for them? And will they ever have anyone representing their interests downstream to argue in the best terms? Because we know that the conditions of the deal change with each investment, where every investor is fighting to ensure that their stake in the return comes first. LP investors can put pressure on. Like, there's all sorts of things. Chris Newman just wrote something, VC at Panache, about the dark side of VC recycling, which is when returns from companies go back into other investments from the VC fund rather than back to the LPs. And that was generally a net positive thing, is leading to potential pressure from VC firms to shut down companies that are still viable so they can take that capital and recycle it. The retail investor is never going to be in the room where any of these decisions happen. And I would say even less so potentially than in the public markets. Do we have to, alongside this, increase the regulatory reporting burdens of private companies that are looking to seek investment from these, let's say, sub-accredited investors? Do we have to give these retail VCs more direct access to the information so then that's squeezed out? Because even now we know that there's one VC that does the diligence, and then there's 3 others that follow along with that and invest, and that there are decisions made by which VC firm has the right LPs for the next round and things like all of the considerations that we at BetaKit only hear about and try to squirt into our stories to provide context of what's happening at companies. Like a little sprinkling on top, just basting the story turkey. Take that, ChatGPT. But the everyday retail investor is going to have they won't even find out about it until after the company shut down or exited, right? Heck, we just had, I'm not going to name the company, we might report on this. There was a company that just got acquired. One of the early investors in that company, right about that on BetaKit, had no idea it had happened and reached out to us hoping that we could put them in contact with the company to figure out what had gone on. I can foresee a scenario where a lot of that stuff happens. So, Anthony, with that, do you feel like there's got to be a greater communication channel there just beyond because I like your participating in people representing your best interests. And I'm wondering, 1, does the math work out that way? But then 2, do we just need more leverage for the retail VC?
So this could be a whole episode in of itself. So let me, in no particular order. So I think there is a nuance to, look, is regulation good? Depends. Is securities oversight good? Generally, yes, but also depends, right? Like, it depends on where you apply that regulation, where you apply that oversight. I'm very hesitant to say that private companies and VC funds should have to bear a greater regulatory burden in terms of reporting and in terms of, financial statements and what they make available to the public in the interest of garnering potential investment from retail investors. I think that probably stifles innovation to some extent. I say this as a former founder, like startups are just not built to do that right now. However, there are organizations that can absorb regulation, that can protect the retail investor and play that intermediary role. One such organization is one like mine, large financial institutions, which have to comply with very, very stringent regulation, but who are also sensitive to their own reputation and what they're selling to their clients, right? So although the VC fund and private companies may not have that regulatory burden, that intermediary does have that regulatory burden to do the additional work to ensure that whatever they're giving to their clients has gone through that stress test and is in fact not bullshit, right? And there are certain organizations that can do it. So that's the benefit you get from working with regulated entities and entities of a certain scale and size. Are they clunky sometimes? Yes. Could they function a little more efficiently? Probably. But you have that benefit. My end state is what I think makes the most sense is when you go to your financial advisor at a big Canadian institution right now and you're going like, hey, like what's my financial plan? I have this TFSA, I have this, I have some money on the side. Where do I invest it? Chances are you're going to get a sliver of public equities. You're going to get some, fixed income. They're going to ask you, well, what's your risk? What's your risk tolerance? Are you high tolerance, low tolerance? But they're not going to give you any VC. And I think that you have to like build in VC as part of that kind of broader financial picture as a kind of integral part of the broader economy. And I think probably the best way to do it is to do it through those regulated entities who are playing that kind of intermediary role without placing that burden on some of the issuing businesses and some of the funds.
Prior to the collapse of FTX, I would say that's a great point. But as we just noted, teachers invested in FTX, right? So I'm not sure if that's a full inoculation against this. But again, there are different large financial institutions that might have greater thresholds towards risk and responsibility. One thing I'd be interested in is we made a really big deal when AngelList came to Canada with their special purpose vehicles and their syndicates, right? And that's something where it's already people following along, one person who's kind of doing the diligence of the deal, leading it. And then every other person who's like, I really trust this person. They know what they're doing. They're going to respect my interests. They all come into a special purpose vehicle, and then that's locked into one group unit, right? You're not one retail investor on your own. You're part of this conglomerate, right? I could easily see that actually being a better vehicle if they allowed sub-accredited to participate in that, because the principle is still the same. And as long as you're following the right people, that might work. I think this leads into the next question that we had, and this was submitted anonymously, so you guess how difficult it's going to be on the AMA chart ranking. But it speaks to your point, Tony, because again, while I might bag on teachers for doing absolutely no diligence in something that they had to come out and say, after months before saying this is a low risk investment, saying, well, we actually didn't invest that much. It's not a huge component for, a pension fund. This person wants us to ask you, Tony, how the recession will provide an opportunity for your bank to show it really does stand with Canadian startups and its branded offering is something really tangible. And I think it speaks to what you were stating before. There's an opportunity right now, there's a moment, given the market downturn, for the institutions in our space that are not necessarily inured, but maybe better balanced against rough times to be able to make strong, responsible, thoughtful, forward-thinking decisions. What does a team like RBCx have to do or should be doing in this space to kind of, air quotes, support startups, because we hear that all the time, or really make a mark right now in this moment where it's a bad time for people without money, but for people with money and opportunity, there's some winnings to be had here?
Okay, so I'll address that momentarily. I want to talk about teachers for a hot second before I get to that.
Let's do it.
So I'm going to defend teachers, but in the broader context of kind of what we talked about. So first off, do I think teachers has egg on their faces? Yes. Do I think it was an egregious lack of common sense? Also, yes, right? Like I think in terms of what was what we now know about governance and board, like I'll tell you right now, like trying to bring this to an investment committee at my organization or at other organizations that I'm familiar with, you would get kind of skewered alive. Okay. First and foremost, where I'm going to defend teachers is that this was a calculated decision. I suspect, I'm not privy to any information that's not public, which is part of a much broader strategy, right? And this is where you get to, pension funds have certain built-in fail-safes for their pensioners, and large institutions have certain fail-safes for the money that they manage that individual investors don't have. Did teachers make a bad decision on FTX? Yes. Did they know that they could insulate themselves and their pensioners in the event that it went south? Also, yes, right? So FTX was part of a complex portfolio construction calculus that those individuals made. Within that kind of portfolio, I am certain that they had accounted for FTX going under. They had accounted for something like crypto completely going belly up. And I think teachers will be okay and the pensioners will be okay. So, but that's a really, really important point to what I was kind of talking about earlier, wherein if a retail investor has exposure to teachers, that's a very different thing than having exposure to FTX. And that's a really, really important point. But setting that aside, I'll talk about a little bit about RBC. I'll talk about the financial sector generally. I'll talk about the big banks and a bit of differentiated knowledge here for the listeners. What's really important to understand about big banks and financial institutions on the aggregate is that we at RBC will do well when our clients do well. And that's not fluff. That is built into the business model. So big banks, when functioning properly, are basically, in tech terms, kind of the infrastructure layer for the rest of the economy, right? So when there's a lot of activity, when there's a lot of stuff happening, those institutions tend to do well as well. But more importantly, the lifeblood of large financial institutions are the clients, less so than the shareholders. And this is just the way that the business works, right? Like the crux of RBC's balance sheet and the crux of any large financial institution's balance sheets is deposits, okay? It's not shareholder equity, right? So the reason a bank succeeds is because it's holding deposits for its clients who trust it to manage its money, who trust it to function properly, and trust it to do what it says it's going to do. So first and foremost, if we're going to succeed, it's because our clients are succeeding. And so we are very incented to make sure that we do everything we can to do that. I think within this broader context, I think what you'll see from us, and this is where I can't comment on the rest of the sector, I think RBC specifically will show itself to be entirely agnostic to economic cycles when it comes to technology and when it comes to innovation. So what we're going to do in 2023 and 2024 will be largely identical to what we did during the bull market in 2020 and 2021. And in fact, we will probably double down. So what does doubling down mean? Well, we're going to invest more into funds. So we're going to support the market. You'll likely see us invest into companies directly. I think we'll continue creating new products that make sense for our clients. And we'll keep innovating and bringing new products to market that make sense for our clients and that make sense for our business and that fall within the broader kind of risk appetite of what we're trying to do to ensure that we're a sound financial institution and that we're kind of scaling properly with our clients. So I think that's what you'll see from us. I think we're not tourist capital on this. And I think as you see kind of other, call it industry participants, whether they're fund investors, whether they're service providers, whether they're whatever they are, as you see them kind of extract themselves from the market when the times turn, I think you'll see us continue to kind of put our shoulder into it and continue to lean into it such that I think we will invest significantly more over the next 24 months, likely than we did during the bull market.
Okay. We had another representative from a bank on earlier this year, and they were said, it's quoting, it's never been a better time to have a checkbook. And I think particularly if that checkbook is put towards almost acting agnostic from the current market realities, then that could be directly impactful.
So having a checkbook is really important for VCs and investors in this market and asset managers. It's different for financial institutions, okay? Because when I say financial institutions are the infrastructure layer, their incentive model is completely different from that of VCs and asset managers. So if I'm a venture capital investor and I hold equity in a startup, my incentive is for that equity to be worth as much as it can possibly be worth, okay? And the incentives that creates, candidly, is that I have a lot of revenue, I have a lot of revenue per head, that I'm not hiring too much, okay? That I'm scaling properly, that enough of the value creation is accreting to the shareholders, to the underlying shareholders. When I'm RBC, I don't care as much as I would if I was just an equity investor. And the reason that I don't care is if my clients are doing well, I'm doing well regardless. So if the employees are getting paid and if revenue per employee isn't great, but the company's growing, I don't care because the employees are buying houses and we're probably lending against it. The employees are getting credit cards. The company's doing well. The CEO's doing well. Everyone's doing well. We succeed as the infrastructure layer. So it's really, really important when you think about the incentive structures across the financial industry. Banks have a unique incentive structure to see their clients succeed in a very holistic way that is probably not consistent with some of the other financial players. And I think that's often lost on a lot of observers. And I think it's an important thing to call out.
Yeah. And it speaks to the moment if you've got more streams and legs to stand on, you are less concerned when one of those legs is undercut or speculated against or things like that. You mentioned something earlier that I thought was really interesting that I want to go back to. You're talking about like RBC's approach to tech. And that actually triggers another question that we got submitted. Broadly, what is the tech sector these days? Which is an interesting question. If health, cars, finance, HR, et cetera, are all tech, at what point does it stop being useful to treat tech as a sector? And I think, Rob, we've talked about this on the podcast before, but having run a bunch of tech companies and worked in a variety of the sectors that have been disintermediated by tech, how are you seeing this? Are we now at the moment where it was kind of like mobile, where like you stop referring to things as mobile or the cloud even? It's just, these are just components of industries. When you think of tech, when we do our future predictions podcasts, are you looking at specific emergent trends or things?
I mean, I bet my career on tech and it continues to eat all the other industries, which makes me employable for now. I personally think that we're on the other end of this information revolution. So it's now permeated everything. Every entrepreneur, I think that's why you see terms like I'm a startup, but like, are you actually building a high growth technology company or are you just building a marketplace? So I think that the term everyone is in tech, it is now everything. But what I would do is I would say that since all companies have software in them or run them, I mean, everyone uses word processors. So does that mean that everything's in tech now?
Well, we did lose the digital distinction a while ago, right? Whereas that
and look, e-commerce was called e-commerce until it was just called commerce, right? So I think that I would now reclassify tech as sort of deeper tech stuff. So like quantum, artificial intelligence. So technology for its own sake is to me a technology business. Everything else is the sector that it belongs in. And it just happens to have been eaten by tech.
Yeah. Okay. Before we get to Tony's well-defined thesis statement answer, I will generally agree with that because, where we're at with AI mostly is that AI will be its own sector until it starts to be commercialized. And then you look at the sectors that it's mostly commercializing in and the companies that don't have that new tool or ability. Like we just had Louis Tetu on the podcast when we were talking about SAS North, basically saying companies that don't have AI in their business are screwed fundamentally. We refer to Coveo as an AI company, but we're doing way more because the enterprise clients that we service just need the insights and the automation being generated by AI. So I do see this as like the minute that true always on sectors require something as table stakes, that's when the term kind of dissolves. But I don't think it makes it any less important. I think it makes it ubiquitous to the point where, some of the entrepreneurs, Rob, that you labeled, were probably like digital X, Y's, and Z's in the early 2000s. And what does it mean to be digital now? Like, it's like not even table stakes. It's the presupposition. I guess, Anthony, to your point, like when you at RBCx are looking to invest, I'm assuming you're looking at sectors where tech provides certain opportunities, right? Unless you're looking at deep tech. Is that aligned with where we're going? Or do you have a exact opposite take on this that's going to blow our minds?
Yeah, I don't know if I have an opposite take. I'd say, in terms of defining tech, in a colloquial sense, I would define tech as information technology, right? Or companies whose primary, value creation emanates from information technology. So ones and zeros, right? And that's important because not just definitionally, it's important because those companies look and feel and smell different than all other companies. Companies premised on software IP, they tend to have, very high upfront cost, but basically zero variable cost, right? And so once you've created the IP, you can diffuse it basically everywhere, right? There's no hardware component, there's no inventory component, there's no barrier to scale. You can sell it in different countries. And so from that sense, when we talk about technology, these are companies that the scale component is built into it, right? Like, network effects are built into it. These are like fundamentally, just from a business standpoint, different companies. And that's why you've seen kind of some of this kind of meteoric rise. And honestly, that's why in large part the venture model works, right? Because you can invest in a seed stage company and have a reasonable expectation that in 5, 6, 7 years, it may be a public business that's operating on, well, maybe not 7 continents, 5 continents. So that's really important. I think, more academically, how kind of you define technology companies, I think it comes back to IP to some extent. I think from the RBCx lens, it's not just software to us. It's, software is a really important component. Information technology is a really important component. But, healthcare and life sciences are equally a really important focus point for us. And, in that sphere, particularly in biotech and drug discovery and that sort of thing, again, you have very unique businesses that are premised on IP, that are premised on, very, very high upfront investment to create IP with very, very, very low price elasticity of demand once the IP is created. So once you create the drug that's saving lives, you can, you can sell it at basically nominal, marginal cost. So unique businesses.
Innovation is not commoditized. I think it's noteworthy that you're bringing this up the week in which the federal government just announced just under $100 million of funding support to innovation hubs across the country to help Canadian startups better develop IP, right? That being maybe IP, either commercialization or retaining the IP here being a decade-long bugaboo for our sector. Okay, so then let's close on an easy one. Final question of 2022. Couldn't be any easier. This question's coming from, hey, Alex Kinsella, former coworker, friend of the pod, never a guest of the pod. There's a reason for that, Alex. Alex asked, do you think 2023 will see companies starting to move from work from home back to the office? I couldn't think this is an any easier question because the answer is obviously no. If it didn't happen in the first 2 years post-pandemic, why would it happen next year? We are creatures of habit. This is the new habit. And unless there's some new horror that pushes us out of our homes and forces us to all show up at the same time, we're doing a podcast with my beloved co-host, who I just saw in person for the first time in a while at BetaKit's holiday party, and Tony Dagger, who is, I think this is the third time we've been on the pod in the last year, and we're all recording from our various apartments with a variety of gear. If we wanted to, we could have done this in person. We could have had a nice dinner, got a bottle of wine, and just recorded live. We did not.
All I'll say is that I don't think it's going to be quite as binary as it's been. I think the question specific was like companies starting to move from work from home, like the forcing thing. So notwithstanding Twitter and the precedent it might be setting, I'd say that, I think that look, if you live in a small condo, you kind of want to not be at home all the time. If you live with loud children, you kind of don't want to be at home all the time. Does that mean office in the traditional sense of office? No. If there's an impending recession and people might not want to pay rent for office, no. But I don't think it's going to be this everyone's working from home and they're just working from home. I think they're kind of, pardon my French, but fucking done being at home all the fucking time.
I would agree with that. But to your point, though, the company's got to make some decisions here. And we just saw Shopify back out of the well, which was the space being built on top of or the rubble of the former Globe and Mail building was supposed to be kind of their crown jewel and maybe supplant the 4 or 5 offices they were cramming employees into while they were waiting for that to be built. Now they're just not doing it, right? So if you happen to work for a company that sets its location as internet everywhere, despite where it might pay taxes, that you might be stuck in a decision process there. Tony Dagger, final answer for 2022. Are you seeing anything different here in maybe portfolio companies or what you're hearing in the space? Is it that simple binary I'm looking at? Is it what Rob's saying where there's going to be more weird or maybe a gradient or spectrum?
I mean, look, I think hybrid is the future by and large. I will say that I pushed Douglas to get together in person for this pod, and it was a resounding no.
Dude, I didn't even know you were in North America, to be honest.
No, look, I think like most things in life, I think there are trade-offs, and it's finding the right balance between work from home and working in the office. I think 100% remote, I think you lose things, right? Like you lose some of the spontaneity, you lose some of the collaboration. And I say this as someone who was very much in the work from home camp. I think I've had to kind of, reevaluate now that we've been back into the office. I do think there is a benefit to being in the office. That being said, the irony of the whole thing is I actually don't think productivity improves in the office. My sense is that if you're going to go into the office, if you're going to get together in person, you're doing it for culture. You're doing it for
social cohesion.
Yeah, you're not doing it for productivity. I think you take a hit on productivity in favor of, yes, like you said, social cohesion and
we just experienced
culture.
this at BetaKit. That we had about 20 people there for the team dinner, and it was the first time that all of those people had been in the same room at the same time. And there were 4 or 5 different groups that were meeting each other for the first time. And I was probably the only person there that could introduce every single person and say, that's that person. And they're like, that's that person? There's a huge component of this. I also say there was no productivity happening at that holiday party, but the food was delicious. And I'll say in 2023, BetaKit is considering, after not having an office for 2 years, establishing a presence somewhere downtown once a month where we can get together and work as a team that day to continue that social cohesion, because we just don't see each other in person enough. So with that, I think I'll also commit to, in 2023, the 3 of us doing an in-person AMA, potentially recorded in front of a live audience. And if you're interested in that,
tweet Tony.
Don't tweet LinkedIn, because that's where the action is now.
That's true.
Send us an email, podcast@BetaKit. Let us know what you think about the changes we made this year to the podcast, other changes that we could make. We read every email you send, even the VPs that you pitch that we would never want to talk to. But we want to hear your feedback because we made a bunch of changes. You seem to like them. You probably saw the growth that we've seen when we shared our Spotify Wrapped and things like that. We've got a bunch of other changes coming in the new year, but we want to do it with your consent, with your consideration, because it's really fun for us doing these episodes trying to barrel roll over your questions, because they're always thoughtful. And it was hella fun doing it in person at SAS North, even though it was at an ungodly hour in the morning. So you can bet that if we're having Tony Dagger on a live AMA podcast in person, it's going to be at the Tony Dagger hour. Give us that feedback. Let us know. And we will see you in the new year with some hot, fresh podcasts. We've got some guests lined up right in January. I'll stop talking now. Spend time with your family. And if you're looking to avoid time with your family, check out the podcast. The BetaKit podcast is produced by BetaKit Incorporated. It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.